I have Bismarck Rewane, the CEO of Financial Derivatives and member of the Presidential Economic Advisory Council. We also have Kola Karim, the chairman of Shoreline Group, and Tilewa Adebajo, the CEO of CFG Advisory. Gentlemen, it's a pleasure to speak to you again. Bismarck, I'll start with you. Any big takeaways? As I mentioned earlier, a bit of an uneventful MPC, but were there any comments that stood out for you?
Yes, two things. One, the fact that he acknowledged that there's an increase in inflation, but he did say that they were optimistic that inflation would abate at the end of the first quarter. However, there was a statement that said that broad money supply went up from 10.14% to 13.77%. When you see broad money supply grow at that rate, and they hope also that the harvest will subsist till March and April, I think those are two optimistic assumptions that may not hold. Therefore, I'm of the view that you are likely to see inflation increase. By the time you have February numbers, January and February numbers increase, there will be no choice at that time, and the US would have actually signaled clearly, and the UK, by increasing interest rates, we will have to definitely begin to normalize our monetary policy. Right. So I think that whatever temporary measures we see today and decisions will change by the time we go to the March meeting, definitely.
Right. Tilewa, over to you. What were your big takeaways?
Well, the biggest takeaway for me was that we have three different growth projections. One for the federal government at 4%, the central bank at 2.8%, and the World Bank at 2.7%. Well, I think this is very interesting because I think I'm happy that there's a focus on growth and output, because the only way that we can resolve our challenges is to consistently grow this economy at 7% per annum on a consistent basis. And it is only at this time we can lift this country out of poverty and can get unemployment and all the other issues going. So in that aspect, I'm very pleased with the fact that there is focus on growth and they have held rates to be able to maintain the fragile state of the economy. I'm not going to repeat inflation because I think Bismarck has handled that quite well. The only concern for me is the fact that there's also pressure on the system, as we've said, from fiscal policy of the government and the unsustainable debt service. Now, we're already financing some of the ways and means through the CRR mechanism here. And the problem with that is that it seems as if the public sector is going to begin to crowd out the private sector when it comes to raising funds. And this is something that might affect the private sector and might affect output. That is my only concern. And I think we need to begin to address and get this balance between public sector funding and, of course, the demands of the private sector, which should drive economic growth. But I think other than that, I think the central bank has done what they need to do. The central bank has gone beyond monetary policy with a lot of the interventions they've done. They need to do more in oil and gas. I think Kola might talk about that. But at the end of the day, I think the focus should be on government, and let us begin to see fiscal restructuring that will ease a lot of the burden.
All right, I'll come to you now, Kola. Not much was said about the oil and gas space. We're a bit disappointed given the pressures that we're seeing with respect to oil production.
Thank you. I think it is, for me, this is such a critical part of the whole monetary policy drive anyway, because the main core, which is the foreign exchange earning, and this industry is centered around that. And if that is the situation, the governor said something which is very important. He said the two divergence of importance is we identify inflation and we also identify growth. But if you think about it, and if we're to drive the growth, that the monetary policy needs to also focus around the type of intervention programs that needs to come to support the oil and gas industry, to further drive that sector to producing the foreign exchange earning capacity that the government and the central bank and the monetary policy drivers needs to help them ease the situation that we're facing, the headwinds. The second thing that was not said, and I picked from what Mr. Governor did mention, was the reference to the lack of enough production versus the amount of remittance coming from an MPC. Again, this should be a red flag that should be addressed, and a centered position is put in place to make sure this is a focal point in trying to redress the balancing, because foreign exchange is required hugely to making the situation easier before the next monetary policy meeting.
All right, I want to come back to you, Bismarck, and typically we like to project how the market will react to this decision, but it was widely expected. So I would rather have us project a little further down the line. You are expecting inflation to continue to take up. Does that, in your view, mean that the central bank will have no choice but to allow those T-bills and OMO rates to move up?
No, I think that is one angle. The other angle is to look at it from the perspective of foreign exchange disbursement. If you have inflation due to shortages and supply bottlenecks, then one way of doing it is to actually put more dollars into the foreign exchange market for manufacturers and others to get output growing. If output increases, then you will see prices begin to moderate. So you will achieve two things. One, you will have output growth, and you will have moderation of prices. At the same time, you increase the normalization of interest rates. When you do all of this together, you get what we call general equilibrium. But if you decide to hold one down and do the other artificially, then you will have these distortions. But coming back to the point which Kola made, the question is, he raised a very important point that the remittances in foreign exchange by the NMPC back into the Federation account was declining at a time when oil prices are increasing. That itself is a major issue, and it signals to how much is under recovery,
right,
and how much of the subsidy issue. The subsidy now is becoming a drag on the foreign exchange earnings of the country, and also a drag on government fiscal consolidation.
All right. And final comments from you, Tilewa, as we begin to round up.
Well, for me, I think there's consistency, as I've said, in the monetary policy. The direction of monetary policy is clear, and I think the U.S. Federal Reserve has already telegraphed the markets and told us that they're going to increase rates going further. So we know what to expect going further. We all need to make our adjustments. But I've said, as I've always mentioned, the big elephant in the room is being our debt service, which is going to increase again with higher interest rates. And I think for me, that is what we really need to address. Because if we don't address the debt sustainability issue, it will continue to impact our growth. So like I said, my comment is I would like to see more on the fiscal restructuring side, because the public sector is beginning to crowd out the private sector when it comes to demand for funds and capital. Okay.
Kola, final comments from you. And if you can speak to this point, I was just reading that Goldman Sachs is projecting that we'll see $100 oil. You've already spoken about the issues with vandalism, bunkering, and so forth. Do you anticipate that things are likely to get better, or are you concerned that we're going to see more of the same?
Look, I am concerned if concerted efforts by the authorities are not put in place in making sure we block this losses from the system. At the most important time that Nigeria needs the foreign exchange, it's going to become a major problem. But look, my closing remark is this. As the world is now getting to a COVID normalization process and acceptance, you see what the UK has announced, no more masks and no more testing. And the world is going to come to accept the pandemic as part of our daily lives. It's going to be like malaria or flu. As we come to accept it, we're already seeing industrial growth, resurging again, industrial output coming back up. Factories are opening, airlines are flying, airports are opening, countries are opening up. Consumption of and demand for crude and oil will increase. It will put pressure, as we're seeing already, because global positioning is tightening, looking at the problems coming from Russia, Ukraine, looking at the problems in Libya, problems in Venezuela. Again, Iran, in trying to sort out the problems when and how, we're still not sure.
Right.
So the demand for oil would always be there. This is an opportunity for Nigeria to get its house in order in focusing, in trying to gain from that price upswing, in focusing on our production and meeting our targets.
All right.